right, today is Thursday, January 30th. We're going to be going over today's trade setup, and we'll just do one long review since it's later in the afternoon here. So first off, obviously when you start at the beginning of the day, you're going to be looking for your discount and premium to be telling you which liquidity you're looking for. So again, we have these lower highs or higher lows, I'm sorry, coming up here, and then we have a breakdown of price taking out those higher lows and making lower lows. So we're going to be anchoring it to the highest point where it turns around here, and then we're going to be anchoring our other point to the lowest point here. So we have a discount on here and a premium above the 50% mark. So today we were looking for sells. Price was open and running around in the premium. So if I look here at the 8 o'clock candle, I'm looking for a shift of, a run above liquidity, which would be resting on that high right there, as well as potentially this high here. And so we're looking for those highs to be broken. And it looks like there's also one high right here as well. So 9 o'clock moves above these highs, so then we'll drop down to a 1 minute chart, expecting to look for an entry. So looking over here, this price was traded up at 9 o'clock, so we no longer need that because price cannot be, or liquidity cannot be taken before 9:30. So it looks like this next liquidity was taken at 9:48, so we're good to go there. And we're looking for fair value gaps down. Okay, so they're made up of 3 candles, 1, 2, 3. So there's a fair value gap right here, and then there is also a fair value gap right here. Now that fair value gap is made up of these candles, 1, 2, 3. And then we also have this fair value gap here, 1, 2, 3, and we also have this fair value gap right here. So obviously, if you don't have a rule for getting into the market besides just a fair value gap, you're going to end up entering on these 4 different fair value gaps. How do you know which one is the one that you want? Well, you want one that has a shift to market structure. So market structure is higher lows right here, right? We're making higher lows. And then our shift to market structure is when price starts making lower lows by breaking below the higher lows, right? So if that's the case, we can get rid of these fair value gaps right here, because this lower low right here is taken, or higher low is taken with this fair value gap right here. So we're looking for an entry into this fair value gap. So price has to trade back into it, and then we're looking to go short. Now, price obviously did not trade back up into this fair value gap, so we did not get an entry this morning. However, assuming that, pretending I should say, that candle had traded up into that fair value gap, we would have been entered in short, aiming for a target on the 1 hour chart. And so the easy target for that was this swing low right here. We're looking for either a fair value gap or a swing low to enter or to exit our trade in. And so if I draw that out and come back to the 1 minute chart here, we can see that would have been a $103.50 in price movement move. And we would have ended up, that would have put us at a move for today of $32.96 on between the 8 accounts, with each account gaining $412. So again, we didn't enter into this trade because there was no wick into this fair value gap, which is what we were waiting for, and we follow our rules. So for now, that is going to be all, and I will see you in the next recap.